B2B Cambodia, the portal for business use in Cambodia.
Okay, let's go on to a little another challenging subject, which I found in audits would be at least an opening gambit for auditors to tax, and then eventually maybe relax that taxation based on a lot of documentations and discussions, and that's shareholder and director, whether theoretical salaries or actual salaries.
That's it, yeah.
So let me explain just quickly to the audience. So then there's very much a difference between a shareholder and a director, and this is sometimes where we get some confusion when we talk about this particular subject. Shareholder is an investor. A shareholder is an investor. They put money into capital into the company for the purpose of getting profits and dividends. So I put in $100,000, let's say, in a company, and I expect that with my investment over time, I will get a return on that investment in the form of dividends, which is sharing of profits, or eventually, hopefully, sell it at a higher price. The last thing I want to do, typically, as a shareholder, is get a salary. But I want to work with the company to make sure the company is successful. But if I take the very money I put in as an investment as a salary, it's kind of contradictory of why am I putting money in to take it out in a salary. So that's a shareholder. But shareholders do work in the company. They do expect to get compensated because they may be minority shareholders or shareholders that don't have a very big investment, or even shareholders that do have a big investment that wants to see the company succeed, but they need to buy food and pay their rent. So they do take a salary. And I think the tax department's been fine with that in those cases where there's an employment agreement and the shareholders pay consistently, and we have to be careful. So I've seen cases where shareholders don't understand themselves, where they may have a salary for 1 month with $2,000. Company does well that month and says, I'm going to take out $10,000. No, that's a dividend. That's a sharing of profits. So you have to be consistent with the salary of $2,000 a month or $3,000, whatever you decide, with an employment contract. And the tax department says, okay, I understand that. When you start taking up inconsistent amounts, then the tax department says, okay, this doesn't look like a salary, and they're rightfully so. We'll tax it as especially if they're overseas, as a dividend. Yes. So the other portion of this is the director. So companies do appoint directors, and there's different types of directors. There's directors that are shareholders themselves. Typically in your MOC, when you register, the MOC will kind of automatically say a shareholder is a director. That's how it works. So you have to be very specific on registration if you don't want that to happen. So directors also could be independent directors. And if you're a listed company, let's say in Japan, you're a Toyota or a Nissan, you're going to have a lot of shareholders and a lot of directors. So the difficulty with this is if you are going to tax every director, whether they're working for the company or not, this now becomes a working group D issue.
Correct.
So I'll let you, I've talked a lot on that already.
You've done very well, Anthony. No, listen, I think in the first instance, the important thing to highlight is that if the director is earning a salary, they should be paying salary tax on that. A director is not a get out of jail free card, doesn't give you exemptions to standard salary taxes that all other employees are facing. So if a director is working the business and they're performing duties, whether they're an executive director, whether they're traveling regularly, then they should be paying salary tax on those. Again, if you have directors' fees, so these are maybe not a salary, but these are fees for coming to a meeting, for attending your duties as a director, and many independent directors will get a reasonable fee for their efforts and their duties in supporting their company. Those two will be maybe subject to withholding tax. Maybe they're subject to non-resident withholding tax depending on the location of the director. And so those are also important components that we'll need to make sure are being taxed appropriately. I think often the question in the business community, though, is what if it's just a tax director who just signs a statement once in a while, who's not really active in the business, who is just a silent shareholder? Maybe the two shareholders are the wife and the husband, and maybe the husband's doing all the work, but the wife is just a silent shareholder, or small business arrangements. And is there any scope for them to be taxed, to have deemed salary? And this is one thing we're working very closely, just trying to make sure we have a consistent position where we say, okay, if you're working in the business, taxable. If you're receiving fees, also taxable. But if you're not active in the business, and maybe you're just, your name's in the Articles of Association, if you're not physically present in Cambodia at all, you're not physically engaged in the routine business, maybe your role is limited to just attending board directors meetings, maybe you'll just occasionally sign some direct documentation, and you're not receiving a salary, then there shouldn't be any scope for a salary tax in that space there. And that's where we've been trying to work really closely. And again, it comes back to the main message is document, document, document. Because it really helps you in your processes. It's okay, I've got a passport here which has no entry to Cambodia. I can see that all we're doing is signing a few documents a year. That's a good case there to say, okay, there should not be salary tax payable in this case.
So I've done on audits that I've had to deal with this particular issue. One, if a director is getting a salary, of course, the same as the shareholder, has to be consistent with an employment agreement, even if it's a very low salary for basic minor tasks. And it's typically the issue comes across when directors are living in Cambodia as opposed to overseas. If they're overseas, usually the tax department asks for the passport to kind of prove that there's not a presence here and they're not actively involved in the business here. So that's been documentation that's been required. But again, directors have to sign. I'm a director on many companies. Some of them I barely get involved in just to sign a piece of paper, so I wouldn't expect a salary. Some of them were very, very involved, where I do get a director's fee or salary. So as long as you have that employment contract that states the compensation the director will get, and you pay your taxes on that, it should be okay.
Well, I'll say the great thing about Working Group D is our main goal here is to have consistent application. What we don't want to do is say, okay, these sort of companies don't get assessed for this, other sort of companies do get assessed for this. We want to make sure we have consistent application of the law across Cambodia. And this is where we work with the different chambers of commerce. We're speaking here from AmCham, but we also work very closely in the working group with those from the IBC, from the Eurocham, from the Japanese and other partners as well. And we want to make sure we have consistent application. And a lot of it is, some things take a long time because we want to have a positive result at the end that we can apply consistently. And this is where practice, instructions, circular, notifications, often in Cambodia there's a lot of these which come out, but generally they're all for the benefit of the community to make sure we have a consistent application.
Correct.
Because this is often the biggest concern. I think actually Cambodia's had some really positive progress. The latest law on taxation, the SOP on tax audits, some other SOPs are coming out. It does apply a really clear framework to work with.
We're big fans of the tax department, actually.
Exactly.
We are. I mean, only really because they really try to keep the market updated with regular forums. They have educational, at least for my staff in Kamai, there's regular educational forums that they have on Facebook or otherwise. And I think, if anything, they listen. They really do listen. They may not always agree with us. I mean, they have a responsibility to collect revenue for the national interest. But they are probably, at least in any country that I've worked in, the most open to take issues into consideration. I want to talk about this, and it's still an issue and recently noted by the World Bank, okay, the informal economy. Which I think by all admissions is still around 50% of businesses here. 40%, if we're going to be generous, are still not registered. And that's a lot of money escaping the tax department that we can. It's in every frontier market or growing economy, this is a gradual step. I'm interested. We just incorporated our business in Vietnam a couple of years ago, and it's very interesting to see how the Vietnamese tax department has really captured the informal economy by insisting that to do invoices, to do an invoice, it has to go through the tax department. Okay, the POSs. I believe in restaurants, if I'm not wrong, or through the tax department. So you can't really escape tax in some markets, and I think gradually we're going to have to take that direction. But the difficulty has still been over these years is capturing that informal market, and I think also, unfortunately, even those that are registered, there is some underreporting still in businesses. I think we have to pay our taxes. All our businesses are compliant, and we always pay our taxes. So any kind of opinion on that, on the informal economy and how this could be better improved?
Yeah, I think there's a spectrum to deal with, because the local coconut seller down the street, you don't want to make sure you create an administrative burden for people who just want to run their business, who just want to do their operations. And
so you don't want VAT when I on the coconut cart that I.
But I think there is a broader spectrum there because it does become competitive pressure, where you have the compliant businesses who are doing their best to pay their taxes and follow the laws. They want to make sure they have consistency with their business, with those who they're competing against. And I think there's a few important steps there. I think one of them is really in that transparency, because we know the tax department is doing some really good work in expanding the tax base, and we want to have that visibility of making sure we all know who's paying tax and make sure it's done in a consistent manner. But I think there's been some long-standing efforts to expand the tax base. Now I think sometimes the challenges is maybe there's tax exemptions in some sectors and consistency of application in other sectors. And how do we as members of private sector working group make sure we have this balanced to meet the needs of driving the economy, but also keep a balance in the economic base as well, in the businesses in Cambodia. I think what you see is efforts to bring in VAT on e-commerce is almost a way to also have some limit here, make sure things are not coming from overseas, avoiding what we call BEPS, the base erosion of your profit share, and having reduced tax implementation. I think one thing we look at a lot is tax holidays. These are great ways to drive investments. These are a great way to drive foreign direct investment into Cambodia. But we want to make sure that these are balanced, because sometimes if they have no limit, then it may create some misbalances. And so there's some opportunities, I think, in Cambodia. This is something we know that is always a challenge to grow the profit base or the revenue base of the tax office. And the informal sector is one place where there's expansion, there's opportunities as well. One thing I talk about for a moment is the different statuses of taxpayer. We have the gold, the silver, the bronze taxpayer. And I think it's a really great initiative because, it's quite an honour to be a gold status taxpayer, but it does have a sort of point system where you can work towards it and you can work towards that recognition. And that's a really great way to reward the good taxpayers. So, okay, you've been compliant, you've been submitted audited statements, you've been paying on time, you have no variances in your tax returns, you have this consistent application, and then you get recognised with the gold taxpayer certificate, and that also reduces some of the burden you may have on some taxes. It may also avoid the risks you may face of tax audits as well. And so I think it's been a really a positive development where we can encourage viewers who are obviously interested in our tax talk today that, okay, actually looking into how can I get a gold certificate, what steps do I need to take, can be a really great pathway to work towards. Because I think, there's two sides to that. You want to bring in those who are not reporting, but also recognise the value of those who are paying their taxes consistently, who are maintaining a compliant business operation.